Well, here we are at the residence of Dr. Marc Faber. Dr. Marc Faber, who is the editor and publisher of Gloom, Bloom and Doom report, who correctly predicted the last US market crash, has correctly predicted an oil market rally, and in the past has also correctly predicted a lot of financial asset classes. So, good time to go and chat with him, not just about financial markets, but also about life here in Thailand. What you see here, by the way, is a traditional Thai greeting. You bow down and say, Sadvika. That's the Thai way, and it's quite nice, I must say. Let's go inside and ring the bell and get talking to Dr. Faber. Hi, Dr. Faber.
Yes. Good morning.
Good morning. Good to have you. Wow, this looks like a nice house.
Thank you.
Why don't we do one thing? Why don't we just chat here before we go inside,
Yeah,
Dr.
sure.
Faber? So, picture this location, Chiang Mai. What brings you here? I mean, you were born in Zurich. You
Yes.
spent better part of your life in Hong Kong,
Yes.
US, Europe. Why Thailand?
Well, basically, my wife is Thai, and we had bought some properties here already in 1981. But I always told my wife, if ever something becomes available on the river, because you can see down there, about 30 meters away from here, is the river, then I would like to buy it. And then the crisis happened in 97, 98. And the owner of this house, you can see it over there, this is an old Thai house.
Mm-hmm.
He was forced by the bank to sell. So we bought this property. And one of the reasons I like Chiang Mai is I think the climate is quite okay.
Mm-hmm.
It's not as
hot
humid as the south.
Yes.
I mean, you can feel it. It's less humid than Bangkok.
Yes.
And normally it's less hot. We had a drought here like you had in India, El Nino.
Yes.
And so it's been very dry. It hasn't been raining much for about 2 years now.
Wow. It's been raining for the last couple of days in Bangkok, though.
Yes, but very little here.
Yeah.
We had very little rain.
Okay. So, since we're talking about El Nino and the kind of impact it has, do you get a sense that this year might be different? The last 2 years have been quite bad, especially for us back in India. This year, do you think it could be different?
Well, I think, if we look at different markets, I think that after this bear market we had in commodity prices since 2011 for precious metals, and then some agricultural commodities peaked out in 2012, 2013. But basically, for the last 2-3 years, commodity prices have been very weak across the board, especially industrial commodities. But I sense that agricultural commodity prices are in the process of bottoming out, and that when prices improve, obviously the landowners and the farmers will do better. So we've seen actually here in Thailand a significant increase in the price of rice.
Okay.
Also on global markets. Also soybeans have been moving up. So I'm actually quite keen on agricultural companies.
Okay.
We have in Asia a lot of plantation companies, rubber, palm oil, and of course also other commodities.
Okay, let's do one thing. Let's go inside and check
okay.
out your huge memorabilia that you're talking about and the art collection.
Okay. Please come in. By the way, this is an Indian door, if you want.
Okay, so here we are inside the large house of Mr. Faber. Mr. Faber, you told us about this huge property, and I must say this looks extremely brilliant right now. So much art, so many books. Why don't we do one thing? Why don't you explain to us all the artwork and your passion for all the Chinese Mao leaders?
Well, actually, it's not really a passion, but I arrived in Hong Kong in 1973 from New York, and at the time Mao Zedong was still alive. And I had seen how posters in Europe and revolution art in Europe had gone up in price a lot. So I thought once Mao Zedong dies, for sure, all his badges and the posters of him and the paintings of him, which were essentially propaganda art, will no longer be produced because there'll be a counter move and which happened under Deng Xiaoping, the open door policy, and that the existing art would then become a collector's item.
Okay, let's now talk about various asset classes. Mark, of course, has predicted the last US market recession quite rightly. He also predicted the big rise in the oil prices when we had the last big rally in oil prices. So let's ask him what he has made of the recent data points. Mark, the thought that comes to my mind is that you've been very critical of the U.S. Fed and the policy of
Yes.
printing dollars.
Not just the Fed, all central banks.
All central banks, and it's national television, so we can't say exactly what you said about what's the best use of that money. But do you get a sense that this could be unraveling sooner than later, and we might be close to a bit of a problem point for global markets?
Well, let's put it this way. Inflation shows up in many different things. You can have inflation in wages, and you can have inflation in commodity prices. You can have inflation in consumer prices, in wholesale prices, and you can have inflation in asset prices, where assets move up sharply. So if you go back to, say, 1981, Treasury bonds in the US were yielding over 15%. They're now down on the 10 years to 1.75%. They were at 1.43%. In Europe, we have numerous government bonds that sell at the negative yield. In other words, when you buy a 10 years German bond or so, you're guaranteed to lose a little bit of money. Not much, but a little bit. And actually 30% of sovereign bonds in the world, they trade at the negative yield. So we had this colossal asset inflation, which you are also familiar with in India in terms of real estate prices in Mumbai. And although the Indian stock market peaked out last March, it was a bit more than a year ago at over 30,000, we came down to less than 23,000 in January, and now it's rebounded to slightly more than 25,000. Stocks since, say, 2003 have done very well in India. So everything has gone up in price substantially, and as you indicated, my sense is actually that we could have a period of asset deflation, where asset prices just don't perform particularly well.
Okay, you've been a long-term bull on gold. You've said that why do you want to own the dollar? Instead, it's better to own the gold. That's a better currency. We've seen a big rally in gold after
Yes.
2 or 3 years of downtick.
Yes.
Do you see this rally sustaining?
So I think actually it is not 100% sure, but it is likely that gold and silver bottomed out in the period October 2015 to January 2016, and that this was the first leg in a bull market.
Okay.
Because if you really think it's true, what can the central banks do next? Some people, will say, well, they ran out of ammunition. To this I respond, you'd be surprised. If they could increase the balance sheets of the major central banks by 18 times between the late 1990s and today to now $24 trillion, they could increase it another 10 times to $240 trillion. You understand? In Japan, the Bank of Japan now owns essentially half of all the bonds issued by the government. They buy what the government is issuing. And that can last a long time.
Okay. So that's gold and silver. What about oil prices, crude oil? We had a massive bear market.
Yes.
There was some talk that OPEC has lost the pricing power. Now we have seen a bit of a recovery from the lower prices. Do you sense the bear market is over in oil, or do you think this rebound won't last for long?
My sense is that the production has been going up. in the world, especially because of the fracking in the US. Whether fracking will always continue, that is debatable, because the environmental impact is not yet ascertained. It could be bad, you understand? We just don't know yet. At the same time, we have really a mess in the Middle East, a real mess. And that may lead to war or to serious production disruptions eventually. Mm-hmm. And if that were the case, I think that prices could move up. So I looked at oil the way many markets move. When oil was 100, many forecasters said oil will go to $150 or $200 a barrel. And when it was close to $30 or below $30 at the end of last year and in early January, the same forecaster said $20. It will go down to $20 or $15. I'm a board member of some mining companies, and all I can say is the cost of exploration and the cost of infrastructure and environmental things has gone up a lot. So my sense is that an equilibrium price for oil is somewhere between, I don't know, $40 and $60.
Okay.
Now, it may overshoot and it may undershoot.
Yes.
In 2008, we dropped to $32, but then we rebounded very quickly to 100. I don't expect a strong rebound to 100 right away. But again, your question cannot be answered precisely unless we know what central banks will do. You understand? If they keep on printing money, then commodity prices, I think, have actually quite a lot of upside potential.
Okay. What about the agri-commodities, sugar in particular, where we have seen a big bounce after a really long time?
Yes. There's a difference with agricultural commodities. Every year, they are eaten up. Sometimes they are excessive stocks, then the inventory level rises, and when bad harvests occur, there's a shortage of some agricultural commodities. But basically, in general, they are consumed. And so they are very volatile, and they are subject essentially to supply interruptions. The demand is relatively steady, doesn't change that much. But the supply can change a lot. And my sense is that we've seen the lows in agricultural commodities, because a lot of agricultural commodities, the inventory level was high, but they can't be used anymore for food. They can be used for food for animals, but not for humans. And so these inventory figures are probably somewhat misleading.
What about Asian equities, especially China, the way that market has been so volatile, and even a big market like Japan, where we had the surprise move from Bank of Japan on not printing any more money and the market sulking for a really long time?
Well, again, these are very difficult issues, because what we could have in Japan, say the BOJ does not print more money, but the Fed prints more money and the ECB prints more money, then by logic, the yen would strengthen against the dollar and against the euro, which has happened to some extent. Yes. But it would be negative for the stock market. In my view, it would be good for Japan, but negative for the stock market. Or the BOJ, and I think that will eventually happen, they have to massively buy assets, stocks and bonds and everything, and then the yen weakens. It's not good for the economy to have a weak currency, because it erodes the purchasing power of people, but stocks could go up.
The Indian market hasn't moved anywhere in dollar terms since 2008. In fact,
correct,
we'll be giving negative returns for foreign investors over a 9-year period.
Yes.
Do you see that changing, or do you think the best of India story was over in 2003 to 2008?
Well, we had a huge gain from 2003 to 2008. and then we had a big decline and then a recovery move and so forth. I think that I was recently at a conference and they talked about investments and active management and passive management, and so many people said that active management is over, that indexing is taking over essentially the world and ETFs and so forth. But this is not my impression. I believe that stock selection will become again much more important than what the indices do. And this also applies to India, where if you pick the right companies, they can enlarge their market share within the Indian economy. Or if they are very well run, they may be actually acquired by other companies and so forth. So I think that individual sectors and individual companies will be more important than the overall index.
Anything in particular that stands out for you? I mean, since you closely follow India, any sector or any particular area that looks good to you?
Well, consumption looks good. The problem is that stocks are expensive.
Yes.
You know, but there are exceptions. In the fund where I'm chairman, they bought an automobile company. It's an old British company. And the stock did very well because their market share went up and the sales went up substantially. So, you know, it's stock specific. I think in India, many people who live in Mumbai and in Delhi and in other major cities, they will have homes on the beach somewhere. And that will be also fostered because, as you know, in India, you have a lot of low-cost budget airlines. Before, you couldn't fly anywhere. The airports were so bad, and the infrastructure between the airport and the city and so forth were so bad. But now a lot of these things have improved. So I'd say, I think in selected locations, real estate is still attractive. Well, the one thing I want to say, I mean, we always looked at different scenarios. I personally cannot see any scenario under which the current monetary experiment by central banks will end well. Okay. That I cannot see. And eventually, interest rates will go up, maybe not for a long time, but when they go up a lot, possibly, and that will then bring about huge problems. Or maybe, you know, in the 70s, people always talked about consumer price inflation. Now everybody talks about deflation. But when it really happens, the change from we had inflation in the 70s and then disinflation, and now we have this talk about deflation, but suddenly we could have quite high inflation. Personally, I do not see any evidence that we have deflation.
Okay, so that's of course financial markets, but let's do one thing. Let's go upstairs, because what you've seen so far is the big palatial house here downstairs, but upstairs it's a nice balcony. And let's do one thing. We'll have some more chat about Marc's personality, what he likes, what he dislikes, and all that stuff on the other side.